Hello, everyone. This is Nina Olson from the Center for Taxpayer Rights, and we are going to welcome you here today for another one of our series of tax chats on transforming tax administration. As you may or may not know, we did a whole series last year with 14 tax chats that really went through different aspects of tax administration to really look at how the IRS could use the significant funding that it got in the Inflation Reduction Act and our recommendations going forward. And we will be coming out with a report based on those tax chats with our own recommendations. But right now, what we're going to do is a short series for tax chats on race in tax administration. And there's been a lot of attention paid to the racial impact or the racial consequences of certain aspects of tax policy. But what we're going to focus on in this series is tax administration. And so before I introduce our moderator and the person who's really done the organizing of these tax chats, I wanted to give you a heads up on the future ones that we're going to have. On Tuesday, April 30th, we're going to have a program on looking on international issues and also exempt organization issues and how race and tax interact there. And Alice Thomas from Howard University is going to moderate that program. And we have Stephen Dean from Boston, and we have David Brennan from Kentucky Law Schools who are going to be talking about that. On Wednesday, May 8th, we are going to look at racial disparity in tax administration beyond audits. You all know that there was a significant research study that was done looking at the IRS audit selection process, where it found racial disparity in the selection rates. Well, we're going to take this a step beyond audits, and there Les is going to moderate, and Keith Fogg from Harvard Law School, Jeremy Bearer-Friend from George Washington, and then Jacqueline Lainez Flanagan, who's the Deputy Director of the Center, is going to be on that panel. And then the last panel is going to be on just what I was talking about, audit rate disparity and some of the consequences in audits. And there we will have Heidi Elzane, who is one of the co-authors of the study from Stanford that looked at racial disparity and is continuing to work with the IRS. And then we're going to have this is really a report out of some work that the Center for Taxpayer Rights has been doing. Last fall, we had a social anthropologist come over to do interviews with low-income taxpayers who had dealing with the IRS in trying to get their refunds released, and also the clinicians. And right now, as we're talking, there is a nationwide survey going on of low-income taxpayers at 100% federal poverty level with children, and we are surveying them about their experience with the IRS, their attitudes about the IRS, how their attitudes changed based on their experience with the IRS. And so on May 28th, we will have a report out about that with the research director who in the firm that conducted the survey for us, and the social anthropologist will be here talking about her observations. And then I'll be reporting out what our findings and what our recommendations are. So that's the program. I'm going to turn it over to Les to do the moderating and talking to you about chats and how you can participate in this call. But thank you very much for being here.
Thank you so much, Nina, and thanks to the Center for Taxpayer Rights for putting this talk on, and to the Rockefeller Foundation for support for this work. I'm really excited today to moderate this important discussion that's going to look at issues of racialized burdens within organizations. We'll talk about what they are, why it matters, and importantly, how those burdens can be mitigated or eliminated. And this is a discussion that we're so fortunate to be joined by three of the leading academics in the country who've thought about these issues in different contexts. And I'm going to turn it over to them. But just again, as Nina noted, this is a discussion. We'll be monitoring the chat, The general idea is we'll save time at the end for discussion, but if there's a burning question, we might turn to it. But the idea is we'll have some time for some questions at the end as well. So our three panelists today include Pam Hurd, who is a professor at the McCourt School of Public Policy at Georgetown University. Pam has done interesting work in issues of administrative burdens, as well as broader issues on policy relating to inequality. And she is a co-author of Administrative Burden Policy Making by Other Means, which will come up in today's discussion. We're also fortunate today to be joined by Professor Victor Ray, who is the Wendell Miller Associate Professor in the Departments of Sociology and Criminology and African American Studies at the University of Iowa, and a non-resident fellow at the Brookings Institution. Also a Carr Center fellow at Harvard's Kennedy School. And finally, joining us is Don Moynihan, who's the McCourt Chair at the McCourt School of Public Policy at Georgetown. And with Pam, they co-authored the book Administrative Burden, which has been kind of the topic of another talk as well. And we're really fortunate to kind of dig in a little bit deeper and look at, as Nina noted in her introduction, kind of the really important issues of not only about administrative burdens and how those burdens limit access to resources, but the related concern about how race can reinforce patterns of inequality. And this is an issue that we're fortunate to bring in this expertise that kind of originates out of the tax system, but is of really great importance within the tax system. So without much more from me, I'm going to turn it over to Pam to kick off the discussion.
Great. Thanks so much for having us. Just to give you a sense about the structure here of how we're going to do this, I am going to, so how we're going to structure this basically is I'm going to talk first broadly about administrative burden and the way that it sort of can generically impact inequality. And then Victor is going to talk specifically about racialized burdens. And then Don is going to close out by talking about different ways we might think about reducing burdens. Broadly speaking, when we use the term administrative burden, what we mean are the kind of onerous or negative encounters that people have with government. So they're the time you spend waiting in line to get your driver's license renewed. It's the form that you have to fill out 5 times, or what I should say is providing the same information 5 times over to the same agency or entity. It's all these kind of just basically negative and onerous interactions we have with government. But before we talk about those burdens, I think it's important to talk about some sort of normative expectations that we have when we talk about burdens, or we talk about our interactions with the government, or the public's, what I should say is the public's interaction with government. And broadly, our normative assumption is that we want people to view and experience government and those interactions as simple, accessible, and respectful, right? So we want to make processes easy as we can for people. And we also want people to feel respected as they're engaging in those processes. Just stepping back in terms of why we should care about this. Why do we care about these kind of interactions that people have with government? There's sort of 3 general things I'll point to. So the first thing is seemingly small things can have big impacts. So the extra form that we might ask people to fill out can lead to large reductions sometimes in participation, just generically putting aside the IRS for the moment, but generically participation in other programs. So one example that we sometimes talk about is in Wisconsin, they, for the Medicaid program, at one point, they asked people to just get a form from their employer. They didn't institute it with any reason to think there'd be any big issue with it. But when they did that, they had huge reductions in participation in Medicaid, and they had to kind of quickly roll that back. There's lots of examples of this. Seemingly things that might seem small on the bureaucratic side loom large for people actually interacting with programs. The second thing, and the thing that really matters in this talk, I think, are that these burdens have distributive impacts. They can really reinforce inequality. And I'll give some examples throughout about why that's true. I mean, I think the third kind of big picture issue is that these experiences shape people's views of government. If we have negative experiences or negative interactions with government, it can sort of more broadly shape our broader view of what government can and can't do and our kind of feelings about the government. I think a second big point here that's important to keep in mind is that the Biden administration has really made this an explicit goal. They want to improve the delivery of public services and benefits. There have been a series of executive orders issued around this, including, actually, I would add, a racial equity order specifically. So the administration across a range of different agencies throughout the federal government has kind of talked about different ways and tried to provide incentives and provide support for agencies to kind of reduce this burden or these negative interactions that people have. Okay, so but let's get a little bit more specific about what we mean when we say burden. So broadly, these negative interactions we categorize into three different kinds of costs. We think about them as learning costs, compliance costs, and psychological costs. So learning costs are these kinds of experiences we have when we're engaging in search processes to collect information about public services and how they might be relevant to someone. So it's the process of becoming aware that there is a benefit out there for you. It's figuring out the processes you need to go through to actually, say, access that benefit or engage, for example, with the IRS specifically. So to give you one kind of very specific example of a learning cost and how it can impact participation. This is specifically the Earned Income Tax Credit, which is, of course, administered by the IRS. This is an experiment that two folks did that was published in 2015 in the American Economic Review, Bagarva and Manoli. And basically what they did was they wanted to see if they could improve participation in the EITC. Roughly, I think the estimate still is about 80% of those eligible for the Earned Income Tax Credit receive it, but that means 1 in 5 who are eligible are not receiving this benefit. And it can be quite large and impactful for low-income people's economic security. And the gist of what this graph is showing is basically what they found. There were a range of different things that they did, but one thing they did was just simply say to people, here, look, here's the range of benefits that you might get if you apply for this. They basically were, first of all, notifying people that they could receive the benefit, and then also actually giving them a sense about the magnitude of that benefit. So key reductions in learning costs. And there were effectively large increases in take-up of the benefit, basically, as much as 9 percentage points, actually as much as 13 percentage points increase in take-up of the EITC. So that was a reduction in learning cost, and it had an impact in terms of reducing the kind of gap between those who were eligible and receiving benefit or not receiving benefits and those who are eligible and actually finally did access those benefits. Compliance costs, or these are like maybe what we're more typically we think about as red tape, like it's time you spend, it's the money you might have to spend. So it's like finding that tax, or it's paying for the tax accountant to do your taxes, for example. It's the amount of time we spend on taxes, things like that. And generically, the one example we often use in our talks, because the IRS does have to calculate this, is the amount of time people spend each year on tax reporting. And they estimate, the last estimate we have of this was about 7.4 billion hours each year on tax reporting, which totals a value of nearly $200 billion if you try to account for people's time on this sort of paperwork. So this is a fairly significant compliance cost, right? The amount of time that people spend, and then not calculated here specifically, but like, for example, the money that some people pay for tax preparers, for example, or software that can help you do your tax accounting. The third category that we talk about are psychological costs. So these are stigma, stress, fear, anxiety people experience in these processes. So while there had been attention to these kinds of costs, typically when people thought about these kind of burdensome interactions with government agencies, they only really thought about like stigma, particularly in welfare programs. But we kind of believed, and there's, I think, some growing literature to show this, that other kinds of psychological costs really can make experiences burdensome for people. And so this is just like an anecdote, but I think a nice example. This was during the pandemic. This was actually a text I got from a friend in the middle of the pandemic about her niece. And just really talking about, so she was a bar, like worked in a bar, and talking about, the fact that she spent all this time, downloading all this stuff to process food stamps and health insurance for her and her 2-year-old. And she's like, basically it wouldn't work. She spent 5 hours doing it. It didn't work. And she's like, basically, I want to cry. Like, they make it impossible to actually get benefits. And you'll see in a lot of interactions when you talk to people about onerous processes that people experience these exact feelings. There's also evidence, for example, around fear and the way that people's fear of organizations impact their willingness to engage with organizations. Immigrants, this is an issue for people who are here, and people who are here legally documented will oftentimes not engage and access public benefits and services out of fear. And we have good evidence around this. I think we probably do also want to think about that with an agency like the IRS, where it's a bit more complicated, where there is an enforcement mechanism. And so for some things that you distribute, like an earned income tax credit, there is, it's like more of like a benefit for people, right? But that because part of what the IRS does is also do enforcement, the interaction can be more complicated than it would be, for example, with a retiree accessing their Social Security benefits from the Social Security Administration. Okay. I'm going to move through this quickly so that we can go on to Victor to talk about racialized burdens. But the last point here is just sort of generically about how these are patterned generically by inequality. Okay. So yes, it is true that on average, higher income people tend to benefit more generally from the tax structure. And this just shows you across the tax distribution in terms of thinking about kind of benefits delivered through the tax system, mortgage subsidies, things like that. That said, over the past 15 years, we have shifted a lot of spending that used to happen outside of the tax system for low-income individuals to within the tax system. So this is just a rough way to do it, but it gives you, I think, a good sense of this. So this goes back to the mid-1970s and this goes actually about to 2016. And what you'll see is here, right, the traditional welfare benefit, aid to families with dependent children, which was administered through other agencies, there's actually been a decline in spending in that program, whereas we've seen large increases in these tax benefits, basically. So low-income people, kind of more on average over time, have started to interact through the tax system to access these really large and meaningful benefits. The check, though, is that, so on the upside to this shift is that it's frankly less burdensome to interact with the IRS than it is to interact with some social welfare agencies. Quite bluntly, there's less stigma. And sometimes the procedural hurdles are smaller than they would have been, for example, when you're trying to access an aid to family with dependent children benefit, like in the 1980s, for example. But generically, or the example sometimes I like to use is if you think about my health insurance, which is tax subsidized, I get it as a tax subsidy. If you talk to people, a lot of people don't even realize that fact. There's like no burden at all for me. Like, it's just done by my employer. I get the subsidy no matter what, like it doesn't matter. Whereas if you're applying for Medicaid, there are much more burdensome, low-income individual, it's a much more burdensome process to apply to the Medicaid program. There are some challenges, though. So there's some really key challenges for low-income Americans generally when interacting with a tax system. So generically, they don't have the same kind of resources to manage those compliance costs, for example, or the learning costs, the way that I might as a middle or upper middle income individual might have. So there's like a basic ability to kind of navigate those burdens or resources to navigate those burdens. I think a key connection to this is that we have a lot of evidence, the third point actually here, and then I'll go back to the second point. The third point here is that we do have a lot of evidence that people with fewer resources struggle more generically to navigate these kinds of burdens, the kind of more stressful lives, poorer health, all these kinds of basic conditions do make it harder to generically also navigate burdensome systems. And the final point, and this is a really big one, which we saw with the child tax credit, which we see with the earned income tax credit, is that low-income individuals are also less likely to be attached to the tax system, to the IRS, to the tax system. And so we see a lot of people unable to connect to these benefits precisely because they are less attached to the tax system. They don't have incomes that are high enough frequently to require them to file a federal income tax. But the result is that in the end, they don't receive these really significant benefits that they could actually garner through the tax system. Okay, so I'm going to stop here and go to Victor to start talking more specifically about racialized burdens.
So this work combines my theorizing on racialized organizations with work that Pam and Don did, thinking about administrative burdens. And in this paper that we argue that administrative burdens are handmaidens of the racial state, because states often use burdens to discriminate. And that these racialized burdens are a kind of administrative practice that normalizes and reinforces patterns of racial inequality in public services. This can happen when these racialized burdens remove discretion from individuals by imposing onerous rules and compliance procedures. And then that can pull bureaucrats who might personally be supportive of racial equality into the machinery of structural racism. We argue that these practices reproduce disparate treatment and obscure discrimination because racialized burdens might be intentional but plausibly deniable covert rules, or like in the case of some of the tax policy that we're talking about here, facially neutral rules that disproportionately harm racially marginalized groups. So when we talk about race in racialized burdens, I think it's important to define what we mean. And we think about race as a socially constructed relational category that organizations use as a rationale and justification for differential treatment. And we also use the language of racialization to describe the practice of ascribing racial meanings to objects, peoples, and processes. So here, it's important to note that we don't think about race as simply a demographic characteristic or individual identity. We think about race as a feature of organizational structures, as racial processes influence the likelihood that of daily operations. So we think that the racialized organizations theory, it departs from a focus on individual racial identity or demographic composition because it argues that organizations encode racial processes that can influence expressions of individual racial discrimination. So I think you can see this ostensibly race-neutral role when we're talking about the tax system. And the assumption is here in the tax code is that if you don't pay attention to race, then there won't be an impact. But I think we should actually think about this in the exact reverse way, right? Given sort of America's racial history, there's a kind of path dependency that means if you don't think about race, you're ensuring that inequalities that are already built into the system are going to continue sort of unabated, right? So when we talk about social construction in sociology, what we're saying is that an individual's racial identity is correlated with a number of social conditions or variables that together cohere into a subjective racial identity. And so, you know, in again, some of the research, you can see how this plays out in practice, and that you don't actually need a self-reported race variable to intuit the racial identity of people. So, you know, the IRS says we don't use race when we're auditing taxpayers. Yet, if we have their zip codes and their surnames, you can intuit race because those are highly correlated with individual subjective identity. Right. So I'm going to go ahead and. So we think this matters for at least 3 reasons. And that is that racialized burdens as mechanisms of racialized organizations, they can often shape sort of learning costs, right? So for instance, there's research showing that Black folks who have been audited have some frictions in getting information on how to meet those audits. It can face compliance costs and also the psychological costs of stress that come from differential treatment or so. You know, when we think about racialized burdens in the tax system, I think about the work of Dorothy Brown here and how race-neutral portions of the tax code have been disadvantaged Black families with disproportionate benefits flowing to whites. So she argues that Black couples are more likely to be dual earners, facing a marriage penalty in a tax code that punishes egalitarian contributions to family income. Interest deductions for, say, student loan debt and tax breaks for inheritance are also relatively advantageous to whites. And that racialized assumptions built in the tax code aren't obvious, right? But these assumptions for Black Americans can create a series of cascading disadvantages that contribute to gaps in health and wealth. The disproportionate targeting of Black taxpayers for audits and the IRS compounds the broader racial biases by disproportionately targeting Black taxpayers for audits, compounds these broader racial inequalities. I also draw on the work of Carl, whose forthcoming book talks about how across eras, proceeds from the racialized tax system were forged into weapons against Black Americans, thwarting their striving through the mundane bureaucratic violence of inflated property assessments and unfair foreclosures. So Carl traces this history from the end of Reconstruction to the current day, talking about how as soon as Northern troops left the South, former Confederate states began targeting newly emancipated Black Americans with poll taxes and other tax schemes designed to reverse Black progress. Former plantation owners with large land holdings often received tax abatements, while poor Black farmers paid taxes on virtually every piece of property they owned, including tools, mules, and even furniture. Deceptive assessments that consistently undervalued white property and overvalued Black property meant that Black taxpayers often subsidized white services, and that impoverished Black people were more likely to lose their land over a mixed tax payment. These unequal burdens often they were designed to thwart Black independence and made it impossible to get an economic foothold. Expropriation of Black land was often the goal of this, and lost Black land was often added to the land holdings of white beneficiaries. And the disparities that were generated by this tax system weren't subtle. Carl cites Prince George's County in 1928 assessments, with Black real estate marked up nearly 3 times its market value and 20 times the assessed value of comparable white lots. Carl's book is broad sweep of history, and his recent history is just as grim. He cites studies from the early 2000s showing Black homes in Pittsburgh, in New Haven, and Washington, D.C. were assessed at higher values than similar homes in white neighborhoods and funneling resources to white communities. And he also cites a 2017 joint investigation from the Chicago Tribune and the news organization ProPublica that showed that Black homes were often assessed at twice their market value, while white homes were underassessed. So, and finally, there's recent work from Holz and his colleagues that finds that Black Americans who try to intervene in these burdens meet frictions, information frictions, which are a kind of compliance cost, and that Black folks who do end up appealing are often treated differently by assessors. So there's explicit discrimination, right? And so I just want to point out that this is both a system that differentially targets on the front end and then follows through on that differential targeting on the back end by ensuring folks who follow the rules and appeal their assessments can't get the relief they need. Thank you.
So we want to conclude by talking a little bit more about solutions and what that might look like, and maybe think about seeding some talking points for the Q&A, which we're looking forward to. So a starting point here would be to recognize that administrative burdens, as people experience them, next slide, please, Pam, are not something that is sort of necessarily unmovable, but really they're the product of choices that administrators and policymakers have made over time. And in some cases, those choices reflect preferences about different types of values that they want to achieve, or different types of constituencies that they want to serve. One of the points of our book on administrative burdens is that because they are opaque and sometimes difficult to explain, this makes them useful as a form of policymaking when you're perhaps trying to maybe not engage in a public disclosure of your true intention. It also makes it easy to miss some of the negative effects of administrative burdens on members of the public. And so part of what is useful to do, part of the reason we're having talks like this, is to make clear what administrative burdens are and to demonstrate their salience to anyone who's associated with these public organizations. Next slide. So what should governments do? I think broadly, the argument is that government should pay attention to the time and effort that the public is spending on these topics. And so there's always an argument for why some sort of rule or form or process is necessary, but maybe less attention to the cost that that imposes upon the person who's at the receiving end of those new processes, rules, or forms. Another argument in our book is that if you're concerned about inequality, you should be thinking about how different processes affect different groups, or how even the same processes can have differential effects on distinct groups. Cass Sunstein, who has written also on this topic, has argued for thinking about what he calls sludge audits. So sort of routine processes by which bureaucracies do something that they don't naturally do, which is to go back and revisit existing rules and processes from the perspective of administrative burdens, calculate if these processes are really worth the time, and if not, look at some sort of alternatives. Next slide. Recently, we worked with the Administrative Conference of the United States, which, if you're not familiar with it, is this tiny government agency that commissions reports about how the federal government should work. And they asked us to think about what the federal government should be doing if it comes to actually minimizing administrative burdens. And so I want to highlight, and this report is online. If you just Google ACUS and my name or Pam's name, you can find it. I want to highlight a couple of proposals that came out from our research, which involved talking to a lot of people in the federal government. One is that agencies need to build up what we're calling here CX, or customer experience capacity. Too often there isn't a specialized unit within government whose primary job is to take the perspective of the citizen and to think how to improve administrative processes. The IRS is a little bit unusual in that it has a role that Nina has played in the past that provides a specific actor to look at citizen experiences of these processes. And the IRS has created, since 2022, a taxpayer experience office. And so there is some progress that's being made on that count. A second recommendation is to look at simplifying processes, and if they can't be simplified, to provide support to those who are on the receiving end of those processes. And in some cases, we see, for example, in healthcare, the use of navigators to help to simplify, to help people manage complex processes in the healthcare world. A third recommendation is to engage more with stakeholders to identify where the burdens are falling and to get suggestions about how to simplify processes. And here, I think this sort of cuts both ways. In some cases, you often see burdens arise because advocacy groups or stakeholders want to add more nuance and additional protections and process. But I think they don't always understand that this might have the effect of locking out some of the clients that they wish to serve. We also called for using better use of administrative data. And here the idea is that government often has a lot of the information that it is asking from the public. And so if you have administrative data about, for example, groups of people who appear to be eligible for a program, you could do a couple of things. One is you could engage in better targeted outreach. And so Pam gave an example earlier of how the IRS did that with the earned income tax credit by telling likely eligible clients, here's what you could benefit from. A more aggressive use of administrative data would be to change the default option from opt-in to opt-out. That is, to automate the provision of benefits when the government can verify that someone is eligible based on the data that they have available to them. And the final recommendation here is to engage more with general counsels. We find this generally, but in particular with administrative burdens, one of the objections to changing things is often that we've always done it this way, and there might be some legal liability or legal risk in changing something. And these objections are likely to come from general counsel office if they're the last step in the process. If they're engaged early in the process where they have some buy-in into changing the system, you might have less of those objections. Next slide, please. So the IRS investments have been made under the Inflation Reduction Act to actually try to reduce some of the costs. And we see that especially in the upfront engagement with the tax system. And so Direct File is offering a means for people to get free tax filing directly with the IRS. This is an experiment. We'll see if it continues or not, but it obviates the need for people to spend $100 or whatever the cost would be with TurboTax or other private tax providers to do the same thing. And we also see the hiring of lots of new customer service workers who can do basic things like answer phone calls and meaning less time engaged in compliance costs when people are trying to engage with the IRS. Next slide. The trickiest part of changing organizations here is how do you change culture over time? And this requires a couple of things. One is you have high level and visible leadership support for what it is you're trying to do, and that this is consistency. This is consistent in terms of messaging over time, where people who work in organizations keep hearing the same things, that we're focused on simplifying processes and simplifying experiences. And I'd say there are some success stories here in the federal government. Veterans Affairs, which a decade ago had significant problems with discoveries of wait lists that were faked in some institutions, has really dedicated a cultural change effort in a way that you see an emphasis on reducing burdens to becoming part of the organization's culture. And so this is an artifact of that. If you look in like a core value statement that the VA has, they talk about values like ease, effectiveness, and emotion. That is to say, like how people felt like those experiences went. And so there's a high level of commitment to those values. If we think about this also from an inequality perspective, I mentioned earlier the idea of looking at the effects in different subgroups, and certainly the customer experience Biden executive order talks about the issue of inequality and potential that the same burdens could have different effects in terms of access. This raises the question, which I hope people will address in the discussion, about how much the IRS should be investing in understanding how processes and rules have differential effects for groups, maybe locking out some groups more than others from benefits. The final point I'd make is thinking about organizational capacity in general. And so IRA, the Inflation Reduction Act, has been really important here in giving resources to the IRS after a long period of stagnation where it's serving more and more people, it's dealing with more and more complex tax situations and different types of tasks. but it has fewer staff and employees over time. And the image here comes from a piece that Catherine Rampell at the Washington Post did, which just sort of was a visual essay of just how overburdened and how underserved IRS employees were in trying to do their job. And so there's a relationship between the burdens that the agency itself is managing and the burdens that it's able to lift off the shoulders of taxpayers and its services to them. So I will finish there. We're very much looking forward to your questions and your comments over what time we have left. Thank you.
Thanks so much. This is fascinating. It's really, the discussion today so far has really, it's another way to think about issues. People who are steeped in working with the IRS and tax administration really, I think, can benefit from a different way to think about the way in which we work and taxpayers experience the IRS. So I encourage you all to contribute some questions in the chat. I'll kick it off. I mean, there's so many things I'd like to kind of probe a bit, but one is something that I think you all touched on to some extent, but we know that in the tax system, the IRS has long used its lack of knowledge of taxpayers' race or ethnicity as a defense to charges that it may contribute to, I'll say, racialized burdens, although the IRS certainly hasn't used those terms in that way. How might the IRS evaluate or judge whether its programs are creating burdens or exacerbating existing burdens that reinforce patterns of social inequality? What would you tell folks at IRS who seem to be now concerned about these issues? And certainly, the Biden administration through its EOs has put this front and center. So how can the IRS really evaluate or judge whether and to what extent its programs are creating or exacerbating existing problems?
One, I think, simple step, and to some extent the IRS already does this. It could just do more of it, basically. The kind of low-hanging fruit, I think, is around differential take-up rates for policies like the Earned Income Tax Credit or the Child Tax Credit. So I think part of the point that I was trying to make was like, generically, we know that the folks who are most kind of vulnerable, who have the fewest resources, are exactly those who would benefit the most from things like the Earned Income Tax Credit or the Child Tax Credit, but they're also least connected to the tax system. So generically, take-up rates, having data on who and who is not accessing those benefits are quite, I think, quite important. We still don't quite have that, for example, for the last time I looked, at least, we still didn't have it for the Child Tax Credit, the large expansion, and understanding potentially demographic differences, race differences, for example, and who is and is not accessing. So those like basic kind of data collection activities, just so we even know kind of purely in terms of take up, is certainly one place to start.
And I'd imagine that that's kind of a good starting place, right? And it seems like that beyond that, kind of evaluating or qualitative evaluations of user experiences are a complement to that, right? And that is something that it seems that the IRS has been engaging in with respect to the direct file program that Don mentioned. And I'd imagine, and I know you all have done some work in advising how agencies should approach this idea of kind of getting their arms around user experiences. Are there some insights that we should be thinking about in the tax system that might take into account that aspect of things as well?
Yeah, so I think there's a couple of things we might draw from direct file. So one is, this is a pilot, very much a pilot, and there's a logic to that where you start small, you figure out what doesn't work, and then in the next iteration you fix it. Right? And that is a logic that reflects, I think, product development, especially in the private sector, which is very attentive to the frictions that people will sometimes have, and applying it to a public environment where also, you know, if you fail in a very public way, as you know, there is another example this year of the FAFSA form is not going well for the Biden administration. That gets a lot of negative political attention. But that requires that you have an ability to track people's experiences. And there are tools and skills like human-centered design or journey mapping that I think are relatively novel to government, but are actually quite useful in you know, understanding the experience of government from the user's perspective. And so we also included that in our ACUS recommendations. And I think part of the layer that you get from taking more of a racialized burdens approach is that you should be sensitive not just to the user experience, but you should be sensitive to how that varies across different types of users.
I have a question, if I may. What is the logic behind the IRS not collecting race data in the first place? Because I think, you know, if they had the data, they could do some of this work without resorting to the variables that correlate with racial identity, right? Or without using zip code, or without having to go through the trouble of figure this out in a much more complex way.
Yeah, I'm gonna take my moderator's prerogative and call on Nina to probably has a deeper knowledge of the history and that than I do.
Yeah, well, there's a question from Grace Allison in the chat about, you know, low-income taxpayers are generally less likely to respond to written surveys. What about an optional telephone survey? And as I mentioned, that, you know, as the taxpayer advocate, we conducted many surveys of taxpayers. And we also are doing one right now. And what we found over the years is that telephone surveys are terrible. The people who are answering them, if anyone's answering them now, you know, when you see a number coming in on your phone, even if you're doing cell phones and landlines, which took some change over the years, people aren't answering the phone. And the only people who are people who, you know, are really basically elderly and subject to scams. And so you're not getting a good distribution of data. What we decided to do in our survey was send out a paper survey with a QR code so that they could send it in, you know, on paper if that was what they wanted to do, or they could use the QR code on their phone and just go through on their phone the answers themselves, and they could go back to it, et cetera. And that seems to be working. So I think that you'll find that surveys over time have really, the tools have really changed. And there is some evidence about certain kinds of surveys having a racial bias. And Pew did some really interesting studies about that from several years ago. On the IRS, you know, it's sort of a challenge. They do have so much data. And I think to your point, Victor, you know, you can look at the surnames and you can look at the locations down to whether it's a congressional district or the zip code, and, you know, marrying it up with census data, really getting a better understanding of what would be the impact of all of these different tax aspects. The IRS, you know, a former researcher in my office started a study that he later published out when he had retired, showing that IRS disproportionately audits people in the South for EITC, and, you know, took it down to the zip code. And you look at the zip codes of those communities, and you can look at the racial makeup of those communities and just go, ergo. And to me, the question has always been, why isn't the IRS looking that even more? You know, we did a study that we never really published, but we looked at, because people had complained to us that that Native Americans were being disproportionately audited for the EITC. And what we found was that the reservations all had a certain zip code, and there was a concentration of audits in those zip codes. When we went in and looked at the data, you could see that it was broken up by the relationship test was not met on these returns, which goes to a cultural norm in Native American societies about who's taking care of the kids, and that doesn't jive with the definition of the child.
Yes.
In the Internal Revenue Law. Well, that leads to, it's not an administrative burden so much as is a legislative burden, and you have to get that law defined. Why that research isn't being done more of, as you're looking, just asking the questions, is to me a cultural issue, that you have to move away from saying we're racially neutral because we don't think about this to we have to think about this. We have to ask the questions and then trace those questions back. That's kind of where I am, and that's how we used the data. But I'll also say for our survey, we tried for a year, and the commissioner is aware of this because I spoke to him about it. We tried for a year to get the IRS to agree to work with us. We were going to pay for this survey to work with us so we could see the IRS data, and we wanted to ask the race and ethnicity of the taxpayer so we could actually trace it back to, this is someone who's been audited, this is someone who's gone through this process. And they said to us explicitly that they do not ask about the race, and they have no intention of doing so, and they didn't think that the information that we would get from this survey was going to be valuable because they didn't think that people would respond.
Yeah, I mean, I think we generically know if you don't, you're not going to see group differences if you don't measure them. So I would say one thing I think to keep in mind about user surveys. So I think a lot of the points that Nina raised are actually really important, which is like the ways in which we do those really affect who answers them. And we do have a lot of methods at this point to ensure adequate representation of certain groups and all that sort of things. There are ways to overcome these kind of limitations. But I would say it's important to keep in mind that with the user survey, who you're not getting are the people who never got into the system in the first place. And I think I wonder sometimes if this is trickier from an IRS perspective, because that's not something you would typically be, or at least in prior years, we'd think about as a problem in the way we think about it as a problem now. So that issue about for low-income individuals to garner the benefits that they're supposed to be garnering through the tax system, like they do have to get into the system in the first place. And so if you're not, if you're just using your user surveys, you're actually in many ways missing the group most important. And the group that does actually tend to drive the difference in eligibility and take up for something like the earned income tax credit.
So I want to just raise another kind of distinction in the tax system, maybe as compared to other government agencies, in that I think in tax administration, the private sector seems to play an outsized role in the delivery of benefits in the form of software providers or commercial return preparers, and even beyond filing, right? The IRS through legislative mandate relies to some extent on private debt collectors to assist in collecting delinquent tax debts, and I would think that this complicates at a minimum the task of identifying and reducing burdens, and I suspect, right, and that in fact the private sector might have an interest in perpetuating some of the burdens that could have a disparate impact on differing groups, and I wonder if you have any thoughts or reaction to that observation.
So private third parties can play multiple roles in relation to burdens. You could say the private tax preparation industry has done a lot to ensure that, for example, take up of the earned income tax credit has been relatively high, and this included, building offices in lower income neighborhoods, trying to ensure that if you were not familiar with the tax system, but if you had earned income, they would help you claim that benefit. And so that, that's a positive take. They also, at the same time, lobbied to maintain a certain level of complexity in the provision of those benefits that would encourage the use of private tax preparers. And also, I think, famously pushed against making it easier for people to use free file or a version of a free tax preparation software that nominally they were helping the IRS to adopt through the free file partnership, but then ultimately we're using to lure clients to their own paid tax services. And so I think partly with private actors, you think about what are their incentives and whether they're aligned with the government. And then if you're in contract arrangements, whether you can manage those incentives in a way that this fulfills public goals. In particular, if you're thinking about contracting for something like debt collectors, the other sort of takeaway we have from studies of government is that it's very hard to delegate blame away. And so if you have debt collectors that are imposing a lot of costs upon members of the public, but ultimately they're employed by the IRS, that blame will get shifted back onto the public organization as a result. And so thinking about managing these contracts in a way that's attentive to the hassles that are imposed upon these private actors is also something you could add to the standard mix of contracting standards.
Yeah, I mean, it suggests a more kind of transparency and visibility in that and interest, from the IRS's perspective that might kind of differ from the norm. I would love to go back to your point about I guess the success story. One of the success stories was the VA, and you talked about a difference in kind of mission or culture, and maybe can you speak to that in terms of how that came about and what lessons might an enlightened agency kind of draw from that experience and others as well, and need not be even in US. I mean, I suspect that there are some other examples internationally as well that might be helpful.
Yeah, so I think the VA, as I mentioned, had this very dramatic scandal in 2014 where it seemed that VA hospitals were engaging in fraud when it came to wait lists. That led to the removal of Eric Shinseki, who was secretary at the time, and he was replaced by Bob McDonald, came from the private sector. And he brought with him much more of a customer focus when it came to managing services, and a relentless collection of data that tracked people's experiences and degree of satisfaction. So the VA has this one metric about how much people trust the VA that they have tracked since that time, and it's gone. And by people, I mean the actual users of veteran services, veterans. That's gone from about 55% to about 80%. And so that's their sort of North Star, is to measure every quarter that degree of trust in the service from its users at every point of contact. But I do think there are a couple of things VA also has going for it. Apart from leadership, it has something like 300 customer experience specialists. So they've built up a huge capacity within the organization to just focus on this one thing. And also VA has strong bipartisan support for its mission and a relatively popular clientele that it's serving. So that it's hard to get any disagreement on Capitol Hill about the idea of we should be better serving our veterans. So in many respects, it's ideally suited to, has this direct interaction with members of the public, with a very popular constituency, and now it has a lot of resources and skills to actually do that at a relatively good level.
You know, if I may, at last year's Tax Chat series, we had this CIO from the former CIO from the Veterans Administration on, and she talked through the process. This was under our information technology section of the chats, where we were talking about just the burden of trying to get systems reinvented technologically. And she gave several demos of what the system for enrolling in benefits looked like before and after. And it was a really fascinating discussion. I'll try to put that link in the chat, but it was really important just on the access issue, people being able to get into an online system to apply for benefits, you know, and that were lessons to take for EITC, or as we were living through the pandemic and you had the sign up for, you know, the advanced child tax credit and things like that, and how that can just prevent you from being able to get into the system. I also wanted to comment on something. Grace came back to me separately and said she was mentioning maybe being able to do customer, you know, surveys while people are online, you know, like the private sector does. And the one thing about that, it sort of goes to Pam's point, is that if you're not engaging in the system, then you won't be one of those people asked to stay on the line and tell us what you really think. And with the earned income credit, that with audits, there is an incredibly high no response rate. It's in the 40%. And there's also, if you add to that the 10 to 12% of undelivered mail, then you have the majority of EITC audits are not responded to. So you will never get why that person didn't respond. You know, so there are flaws you know, there are problems with every approach, but that's a real challenge.
Yeah, I would add that just having more, the idea of just having more immediate user feedback. So rather than waiting for a survey, but like anytime someone interacts, that they, in the same way that we get asked when we try to book an airline ticket, are you willing to take a 1-question survey or a 5-question survey? We should be doing more of that for interactions with the government. And I'll post a link to some research on that, as well as a conference we're hosting about how to better measure user experiences. I think there are ways to do this reasonably well and consistently. That doesn't solve some of the problems that Nina's talking about, which is if these are not interactions where people have an opportunity to provide feedback, or where most people are ignoring the piece of mail that comes at them, it's very hard to get their experiences unless you directly go out and observe them.
Yeah, and that point about ignoring is really important in the tax context, because we're somewhat overweighting the discussion around the tax system as deliverer of benefits, and that's certainly important. But as we know, right, the tax system serves multiple functions, but you know, one of its primary functions, or its primary function, has been collection of revenues, and when someone may have a delinquent a tax debt, they are not as excited to open correspondence as perhaps when they think they may be entitled to get a few $1,000s back in a credit to which they're entitled to get. So getting that experience, you know, even assuming that the IRS wasn't using fax machines, right? You know, and we expect with the influx of funding and resources that the IRS is going to be doing a better job, and is doing a better job in terms of being able to communicate with taxpayers. I also think that I say this about my law school class in tax. I think that there's a benefit of low expectations. Students seem to like my class because maybe they go in thinking that tax is going to be really dry. I think the experience with the IRS has been such that at least the initial feedback on direct file has been fairly positive. I think in part because the expectations are pretty low. But you know, again, that I think is just part of the mix. The other thing that I'm struck by in this conversation, again, I'm a lawyer, right? And many of us on the call on this Zoom today are, not all. And my initial thought, or a lot of my presumption, is kind of a top-down rights-based approach to improving outcomes, reducing error, making things better. I think a lot of what we're talking about today is obviously not completely divorced from kind of a more formal rights-based approach, but we're seeing this kind of ground-up perspective, a user-based perspective, which isn't necessarily grounded in litigation or due process, and in the way that we think about it, or at least lawyers tend to think about it. So this again kind of really broadens the perspective on this, and you talked a bit about culture and kind of the bipartisan approach, and I'm wondering how much also goes into just like training at the basic level for government folks, and what role, if any, is there between kind of academics like yourselves and government agencies and government, a government that's enlightened to want to do the right thing, right? So is there a more kind of robust opportunity for partnerships that could help kind of move the needle not only on culture, but on kind of, front level discretion and employee performance?
I think some of what Don was talking about the report we did with ACUS, I do think having within the agencies these really strong customer experience units, I mean, you can call them different things, right? So I want to be a little bit careful about that label, but effectively a unit that's like focused on what the interactions look like with the public, and that the unit is integrated really well throughout the agency. So it's not sort of siloed to itself, that it has like deep connections with other parts of an agency, as well as has people within it who have a direct line of communication, probably to the director or whoever the head of the agency is. Those were things we found kind of systematically across agencies in terms of which ones were more kind of effective and able to actually make meaningful change, to really change the culture, practices, and priorities within the agency. And yeah, I mean, I do think we've been involved in a couple of initiatives, exactly trying to build relationships between folks in agencies and in places, for example, like in universities and research settings, where people are doing work on these kinds of changes. Like the sort of systematic practices really matter. And I think we veered a little bit away, but like, I do think this really matters for the pieces about kind of racialized burdens in particular. I think Victor was pointing to the role that discretion can play in creating kind of these sort of racialized burdens or these disparate treatment experiences. And there are, systematic policies that can be put in place that can help, at least on some level, I think, reduce that. There was actually just in the New York Times today a big audit study where they were showing still fairly consistent racial biases in employment practices, but they were able to look across like big corporations, and there were distinctions about how those HR entities within those organizations were run and the practices that they employed that helped explain some of that variation where you saw more and less bias. So I think, those sorts of things apply too, I think.
So I want to say something that I think is related here, that I was kind of shocked in reading Carl's book, in which he pointed out that the tax system had largely escaped the sort of civil rights revolution of the 1960s, that, the kinds of anti-discrimination law that we put into place around the workplace never actually made it to sort of like local tax assessors. And so I'm not sure about the IRS, but you would be, if you, I could see how you could be responsible for, say, discriminating against a coworker, but not necessarily discriminating in an audit, right? And so I think that there's a way in which that simple like lack of overarching civil rights framework for the tax system might be impacting some of what we're seeing, right? Even the way that race gets thought about in a way that seems to me counterintuitive in this, like being in this line of research, right? So.
Yeah, interesting. And, I think it's, one issue that I wanted to just to raise as well is there, are there risks, right? Race is such a charged topic in society at large, and we know that it creates strong feelings and I wonder from the perspective of thinking about this from a cautious and conservative agency like the IRS and IRS has been. How do we address what is likely to be kind of a hesitation to for the IRS to take a more proactive approach when it comes to identifying and mitigating kind of this notion of racialized burdens, right? Is there?
So, I guess the way that I think about this question is so we've seen some of the risk of not being proactive about it, right? Of the sort of differential rates of audits directed towards Black folks because of the administration's inability to think about race in a sort of more comprehensive way, right? So when we talk about sort of risk or backlash, I think, yeah, anytime you're talking about race, like there is a possibility of that. But I also think, refusing to do that means that people who've historically been discriminated against or face differential treatment are going to continue to. So I think, it's about sort of the values of equality in public administration that, you should shoot for. And yeah, and I mean, I would just also say, there's tons of pressure for improving the IRS at all, right? So any money given to make it more efficient and make it better was resisted pretty intensely by some folks, and I think this that got overcome in some ways, and this could also with the right political coalition.
I think it's also worth pointing out the Biden administration has issued 2 executive orders, one specifically focused on racial equity that made the point that this matters in terms of interactions that we have with the public, and then also in the Customer Experience Service Act. So there are actually executive orders, I think, that make it pretty clear that this administration expects attention to it. And so I just to piggyback onto what Victor's saying, I feel like there is actually a basis in executive orders as well that would, yeah.
I think I would add is to the degree that claims here related to race have data and evidence behind them, they become a lot harder to ignore. And so, we talked about this example of the EITC audits where there'd long been concerns and suspicions. And then the Stanford study that came out sort of moved that from suspicions to you can't really deny that there's something really going wrong here in the distribution of burdens upon some groups more than others. And so I think once you make the invisible visible, it becomes a lot harder for people to simply wave it away in a way that they might be inclined to do so otherwise.
Yeah, if I might add there, I think that also goes to culture. I mean, I mentioned that you need to ask the questions so that you get that data, so that you can move from some suspicions and stories to something that might be an indication. And I think that, that lets the IRS maintain its position that it is trying to be racially neutral. But now data is showing that there are things that have racial impact. And so what are the steps that you're going to take? And I think that this commissioner, I mean, I've heard him speak about this in informal and formal settings. And this goes to Pam's and yours point about leadership, is that, he has said that, he wants to continue, they need to explore this. What I haven't heard is, and this goes to one of the other panels we're going to do, are you going to explore this in collection? Are you going to explore who ends up with the private debt collectors? Are you going to look at it, who gets liens, who gets levies, who gets their paychecks garnished? And that could be because they don't know, that goes to your learning costs or your compliance costs. You don't know how to find your way to get relief. Who gets to the Taxpayer Advocate Service? Who even knows it exists? All these things that are out there to help you. And that means you've got to have leadership at the top to drive people to think in that way.
And I think that really kind of animates in part this series, right? We're trying to shine the light on tax administration at large and show how this issue, the work that Victor talked about, the work that for example Dorothy Brown has done in the federal tax system and tax policy. And this is kind of drilling down and taking some of the work that's done that Victor talked about from Carl's work at the local and state level. I think that this is so important across different aspects of tax administration. So we only have a few minutes left. I've been kind of hogging the questions, and I want to make sure that we have an opportunity for folks who want to join in. We feel free to join in the chat or raise a hand. All right, I think we're I think that we're close to the end, and I guess the eclipse is coming, so give people a chance to get out there, and Don is prepared. I want to thank Victor, Pam, and Don for really for spending the time this afternoon and sharing your insights and research. It really is incredibly important and eye-opening for us, who are steeped in tax, who may not really understand and know the kind of work that is going on in different disciplines outside, outside what we do day to day. So thank you so much for the work that you're doing and for sharing your thoughts today.
Thanks so much for having
us. Thank you for hosting.
Thank you.
Thank you all. And we hope to see you on, let me think which day that is, April 30th for our next discussion. And again, our focus is tax administration. And as I say, if you can have the best policies in the world and policies that are designed to address racial disparity, but if you don't administer them right, fat lot of good it does you. So that's the component that we're looking at. So thank you all for being there. I see Jim showed up. Jim, do you want to say anything? Just goodbye. Okay. Well, happy Eclipse Day. Bye.
Yeah.